401ks, IRAs, these retirement vehicles, right? There are some things that are true for the masses about them. I'm going to point out some of the things just to kick people's mindsets a little bit more neutral to think for themselves. Again, none of this is financial or legal advice. Putting money away into these retirement plans, you defer the taxes on it. You're going to have to pay the taxes on it at some point. My first point, most people going into these things, they think when you get older, you're going to make less money. But most of us who are good savers and decent investors, you're going to increase your assets, increase your cash flows so that you're probably going to be making more money in the future than today, therefore being in a higher tax bracket. Point number one right there, wouldn't you want to just pay your damn taxes today than to pay whatever that rate is in the future? Similarly, point number two, the tax brackets probably are going to be going up. Now, this is a gamble, but I think most people would agree that government entitlement programs, Medicare, all this insurance stuff, it's probably going to be going up in inflation. So essentially, by not paying your taxes today, you're giving the government a blank check to tax you at whatever the rate they want you in the future. Third point, most people who get on the bandwagon of investing in alternative investments, paying less taxes, doing a little infinite banking in there too, get to retirement a decade or two before you're supposed to at 60 or 70. If you put your money in those types of deferred retirement plans, you're probably going to have to keep it in there for another decade waiting for you, right? It's like shipping your suitcase out to where you are, but you can't get it. And the fourth reason also is around like tax benefits, right? Like when I invest in real estate, you get the depreciation from the real estate. When you go into larger deals, you can do things like cost segregations and extract bonus depreciation. Bonus depreciation is now at 100% now. And when you're doing this, you're able to get a lot more losses than you would need to offset the passive income in that investment. But if you're investing through a retirement plan, or some people are able to invest through self-directed IRAs, solo 401ks, if you're able to do that to access alternative investments like real estate, those tax benefits are insulated in there. So it can't come back to help you today. And that's a really big point here is we want the tax benefits to help us today when we are growing our net worth, and really what's more important because of the time value of money, right? If I save 10% in taxes today, that 10% that I would have not had otherwise, if I get it right in my head, that can grow and grow and grow. It's imperative that you try and shelter your taxes as much as you can early on, like today. And again, one of the ways of doing that is to not invest through one of these kind of plans and programs. And I say it all the time, right? Like a lot of my clients, some of the older ones in their 60s have been duped in a way to invest in these 401k plans for decades, do it the wrong way for that long. I do commend them, that, right? Because that's the hard way. That's a lot of grit doing that. But they get to a point, and a lot of people who do that are multiple six-figure earners because they apply themselves and they success in one place in their finances also predicts success in their career, and they get to a point where they're in that highest tax bracket, like that $400,000 a year range. If they get to the end there and they want to take money out of the retirement plan, they're going to be in that highest tax bracket. So they're like, shoot, I should have took this money out when I didn't make as much money in my 20s. So I think that was like four and maybe a bonus reasons in there. Again, none of this is tax or legal advice, but hopefully it just sets the stage right for people to like, maybe just let me think about this for myself. But in reality, if you're working a day job, you're not going to change your plans otherwise, because the chips are stacked against you, because everybody else around you, around the cubicle land, probably has these set of ideas and they're going to think you're a weirdo for doing it. You really need to get around other investors. That's why I do like a retreat in Hawaii every year. And in a way, we have the good group think going on, right? People understand and think things for themselves, and we get this echo chamber of ideas like that where you can take it to the next level. Unfortunately, we are the five people we hang out with most. So if you don't have any accredited investor friends investing in these types of alternative investments and doing these alternative tax strategies, the chips are stacked against you, unfortunately.